JC, what's going on this morning?
What's going on, boys?
You must have fallen off your chair yesterday when they didn't raise interest rates or talk about it. You must have been so surprised, JC.
Yeah, I mean, I couldn't believe it. I couldn't believe it.
So the
So funny. I mean, they've been making a big deal about this for a long time, and the market's been telling us for a long time that they weren't going to do anything, and sure enough, they haven't done anything. The market's still telling us that they're not going to do anything, and they're still talking about September rate hikes and this and that, and the market keeps telling us they're not going to do anything in September, and we'll just keep doing this over and over again.
I noticed that the bonds got a little bit of a lift, but the TLT really didn't respond in kind. I mean, I know it's had a nice move off the lows of the move. I don't know if you're just in the bonds or in the TLT. You have any take on that?
Yeah, remember, the TLTs are a laggard, because it's an exchange-traded fund. So the futures, the ZBs, the 30-year futures, hit the upside target, which were the May highs. So that's it. So the TLTs lagged the 30 years. So the TLTs didn't quite get up to their May highs. So that's a good example of why it's a good example of a more efficient use of capital would be in the futures contracts rather than the ETF.
Now, JC, let's move on here to Facebook. I know you don't really care about the fundamentals. You care about the technicals. And here we are on Facebook. We are rallied up and got to $99, almost to $100 there 7 trading sessions ago. Pulling back off those highs a little bit after the earnings report here this morning, 94, just trading around in the 94 handle. What are your thoughts here going forward on Facebook?
Yeah, I think you just stay away. The target was hit. We had a $100 target. We hit that before earnings, so I don't think there's any reason to be in it anymore. We've liked it for a long time, obviously, as you guys know. Our targets were hit. That's it. We talked about this last week. Our targets are hit. So once your targets are hit, and then they're going to go into earnings, like to own something like that, after all your upside objectives have been achieved, that's a lack of discipline, I think. So we're good. We're good on it. I don't know what happens from here.
JC, Apple, you've been leery of the Apple here. The beat wasn't good enough here. Is this thing going to break down here? Maybe give folks a chance to get it at 110 or 100, or you just still respecting the trading range?
Yeah, it's still in the range. It's hard to say. I mean, we go over this every week. Our price target was of 129 was hit in February, and we've stayed away ever since. So we're going on what? Over 5 months now of that we've just decided to stay away because our price targets were hit. I mean, we're still in that range. I mean, you want to talk about opportunity cost? When your targets are hit, you're still in it. That's why it's so important to really stay disciplined. We've still been stuck in this range the entire time. Is it going to break down? Is it going to break out? I mean, I really have no idea. Gun to my head, which direction is going to break? Probably down. If I had to guess, but there's no reason to be short unless we're below the highs from last November. So if we can break below 119, I would be short only below that. But we haven't broken, so it's just me guessing. I have no idea what it does, but gun to my head, it probably breaks down and we short the breakdown. If it breaks out, we buy the breakout. We'll keep waiting. Nothing to do until then.
LinkedIn, going to report here after the bell. I know you're kind of leery of trading stocks ahead of their earnings reports there, but what are you reading on the technicals here? Stock got killed last earnings report, fell $50. It's got 2/3 of those losses back here, now trading back up at 232. It's trading down a couple bucks off the Facebook report here this morning. What are your thoughts technically on LinkedIn?
You know me, guys. When you have a flat 200-day moving average, unless you're looking for a mean reversion of some kind, I'd stay away from the flat 200-period moving averages, particularly when price is near it, and price is right at a flat 200 days. So, for me, it's I don't flip coins going into earnings anyway. But in this case, even less of a reason. It's not for me. I mean, there's nothing I could really do here. Price is literally perfectly priced, right at a flat 200-day moving average. It could crash from here. It could explode higher. I mean, it's anyone's guess, but I'm not going to be one that's going to guess if you want to look back at a more primary trend, sure, the primary trend going back, 4 years or so is up clearly. But from a more tactical perspective, which is what we're looking at, I don't see anything to do. I think neutral here, is clearly the best, is the best bias going forward. So I'll be extremely neutral.
Yeah, when I look at a chart like that too, I'm just like, it's just in the middle of no man's land. So I concur with you there. Crude oil had a nice drop. Got up to 60 and change. The retracement here, trying to battle back. Any positions in the crude oil market for JC?
Once we broke the uptrend line from the March lows, that suggested that particular rally was over. The rally that we discussed here on the show a bunch of times in March. That was our signal to get out, and then you could have made an argument throughout May, maybe early June, that was some kind of bull flag, a continuation pattern potentially, and then that broke. So we had a target of $50, which was the lows from January, and we got down there already. So at this point, I don't see any bullish momentum divergences to buy oil. I wouldn't short it because we're back down to, we got down not only to the January lows that I was looking at, but we actually got down to the March lows as well. So I wouldn't be short that just because all the downside targets have been achieved. But to buy it for a mean reversion here, I don't see any bullish momentum divergences. I would really just stay away. Crude oil hit our downside target. Heating oil hit our downside target. The one that still hasn't hit the downside target is unleaded gasoline. Of those big three, that's the one that still hasn't achieved the downside target, and we're entering the worst period of the year for gasoline prices. So that one I think still has some downsides. That's what I'm looking at of the big three. And the energy names, can we get a mean reversion in the oil stocks? Perhaps. It's not anything that I would be, I'd be buying. I would rather sell strength in energy if we do get that.
JC, what about the gold market? It just continues to erode. It seems like it just can't catch a bid for anything here. You continue to, are you looking still at this thing going lower here, or do you think eventually these gold bugs will find some life somehow?
Yeah, I don't think so. I think it keeps going lower, and I think it's great. I love it. It's such a clean trend. What I will say is this: of the precious metals, palladium, platinum, and silver have all hit our downside targets, our tactical downside targets. So, I really think gold of all of them is the easiest one to trade, just because it's the cleanest one here at this point. We've been talking about $1,000 for a long time in terms of our downside target. We've been talking about this for years at this point with you guys, so as long as I've been doing the show. That's the clear target, in my opinion. You had very, very clean resistance right around 1,000, 2008, 2009, and then we broke out. And we essentially doubled from those levels. So there's a lot of market memory near 1,000. So from a structural perspective, that's where our target has been this whole time. Now, with that said, from a more short-term perspective, if you take the 161.8% Fibonacci extension of the most recent rally, which was the March to May rally, that target was hit on this crash a couple of Mondays ago or Sunday night. So short-term, that target was already hit. So we've been flirting with that level for the last couple of weeks, but we've held it so far. So at this point, I would do one of two things. If we're closing below 1087, I would be short. I would get short gold again, but only if we're closing below that. If we're above 1087, I don't see any reason to be in it. We got to be closing down there, or short a rally into 1140. So in other words, if we get this bounce off this key retracement, which so far it's held, it hasn't necessarily bounced. But if we do get that, I would fade any strength towards 1140. So of all the metals, I would stay away from the other ones just because they're a little more messy. This was pretty clean in my opinion, and I would my actions would be one of those two.
Any other commodities? I know we spoke a little gold, a little oil here. I know you talked about wheat for a while. Any other commodities you've been dabbling in?
Not really. No, I don't like. I hated how corn reacted. I mean, corn hit. We had a target in corn of the that previous resistance, and it was obvious why that was our target because I mean it was overhead supply. So we're not reinventing the wheel here. But I got to tell you how disappointed I am with the reaction from those levels. You want to see. When prices hit a former level of resistance, right? You want to see kind of like some. I mean, it'd be. You assume it's going to react in some way, but you want it to react in a healthy way and create some sort of sideways pattern. Not just crash from it. So, I would say that was very disappointing. Other than that, there's not really much that I see out there in the soft energy. I told you, I think most of them hit our downside targets except for unleaded gasoline and metals. All of them hit the downside target. Palladium, platinum, silver, except the gold. I think they can all go lower, but gold seems to be the easiest one to trade simply because the levels are so set up. So in the commodity world, that's how I would look at it. Treasury bonds, our upside targets in the futures were hit. The TLT lagged a little bit. I guess that's to be expected. Overall, I think rates continue to fall. I mean, we've been talking about the Fed not doing anything this entire year since last year. So I'm not surprised that they're continuing not doing anything. And yesterday, officially, Fed Fund futures were pricing in a zero probability of a rate hike in September. So I continue to stress I don't see them doing anything anytime soon. And then on the bonds, you look at TLT with a flat 200-day moving average. Is that really where you want to be? Not for me.
JC, we got your opinion there on oil, but what did you think about the big bounce in the major oil producers, ExxonMobil and Chevron, 3 days ago? They hit a low. ExxonMobil got down to 78.97, and it caught a bid 2 days ago and went from 80 up to 82.5. Continued a little bit of the run yesterday, closing up near the highs at 83.14. Chevron was the same story. CVX, where it got down to $88 just a few days ago. Now it's rebounded all the way back up to 93. Is just short covering, or is this just investors picking bottoms? What's the reason for the big spike in ExxonMobil and Chevron?
Well, I don't know what the reason was, but I'll tell you this. Exxon got to the 161.8% Fibonacci extension of the most recent big rally from the October rally. Hit it in reverse. That there's a reason. The market respects these levels. I don't think it's changed the dynamic of the stock. I would still be a seller. If we had anything anywhere near 87, I would be selling that very aggressively. These things are disasters. These are complete disasters. So, I don't think there's any reason to be short once that target is hit anymore, tactically anyway. But I think you can still be a seller into 87. There's a lot of overhead supply there. A lot. So rather than buying it for a bounce, it's more like, that's where you want to cover. And then instead of buying it because you think something, serious is going to happen here, and I absolutely do not, I would rather just use any strength to sell, particularly towards 87. That's a big level.
JC, one more just general question here for you. I mean, you talk about, your Fibonacci extensions and you talk about mean reversions. Just getting in a little bit of your charts. So the first question and then the other one follow up. What's the shortest term chart that you look at when analyzing something? And then also, what do you rely on the most?
So, I look at daily and weekly time frames. That's what I look at. I might look at 10-minute time frames just to get an idea as to maybe what happened intraday if I kind of want to get the story, right? So, when you got a gap, you might see something gap down and then rally throughout the day. I want to see how it did that throughout the day, or, if you get an engulfing pattern, or I don't know. If you want, because the daily time frames, the daily candlesticks tells you a lot. But if you really want to see the whole story, you got to look a little bit at intraday. So I look at 10-minute time frame. But for the most part, daily and weekly time frames is what I look at. And then what I rely on the most, price, obviously. Yeah.
Great words of advice from
Yeah.
J.C. Parets. He's the founder of Eagle Bay Capital, a 10-year veteran and market technician who actively manages money, incorporating technical analysis and behavioral finance. J.C., great information as always. Thanks for coming on. We'll talk to you again next Thursday.
Of course. Thanks for having me, guys. Have a good one.
Thanks, JC.